Good afternoon, everyone. This is Daily Trading Analysis with a quick market update for today, September 13th, Wednesday, CPI Day, Inflation Day. They'll start with the general inflation. General inflation came year over year higher than expected. This is really bad. We were expecting 3.6, that's still going higher from the 3.2 on the previous month, and we got 3.7. This is really bad sentiment. Month over month, also increasing from the 0.2% to the 0.6% expected and actual data. So two bad readings on the general inflation, most probably caused by the energy push higher. We are going to see that on the detailed report. But first, let's go to analyze the core inflation rates. Core inflation rate year over year came as expected. That's a tick lower from the 4.7%. We were expecting exactly that. And month over month, a tick higher. That's also bad news from the 0.2%. We were expecting flat, but we couldn't get that, and we got a tick higher. So in summary, we got bad general inflation month over month and year over year, decent core inflation year over year, and also bad on the month over month. If we check the actual data on the table, the detail from the Fed, we can see that this is huge, 10% on energy commodities for gasoline, and also 9% for fuel oil. This is brutal. Also, don't forget about services, the sticky part of the equation. We got general 0.4% increase, shelter going up, transportation services huge 2%, and basically that's all. The rest is mostly break even, in line with July more or less, but I think that's a big miss of expectations in terms of market expectations. The thing is that we are not seeing a change in the interest rates. If we check the probabilities, we are still seeing the same higher for longer without any move higher, and starting cutting rates towards the downside at June. That's the same situation. So what markets are thinking, it's reflected in these probabilities not going higher, and also on the market really pushing higher. This is the 30-minute chart. I was watching these two zones of resistance from yesterday. This was the sell-off on the Apple keynote. So those are my main areas. The first one got crashed, 15,544, and look at these pushes. Look at these huge. We are going to see that in the 1 minute. And right now we are stopping at 15,600. There's a lot of volume up here on the Nasdaq. Selling pressure. Right now we are there. I don't think this is on the table. I would like to keep these levels and not sell off. But right now we need to pay attention to the two things that happened. This is the area of the news of the economic data. And look at this ascending triangle. This was clearly a move higher, consolidation, big move lower, and big reversal. This got a lot of liquidity, and look at the volume on this huge push higher. And after that, we are maintaining this 15,540, and we are right now trending a little bit lower, resting a little bit, but I think Nasdaq might have something else on the background. So pay attention, because I think right now fundamentals are not there. We are seeing dollar chopping around. It initially moved higher, but then it got crashed and never went again at that level. So dollar being lower is actually bullish for the market. So be prepared, because I think we can have some things happening into the afternoon. Yields are in the red, and the only thing concerning is that regional banks, look at this. Regional banks ETF, the KRE, it's actually minus 1.33. Look at all these banks, all are in the red. All are in the red. The regional banks are suffering. Also, small caps, where the Russell 2000 was also putting a lot of selling pressure into the S&Ps, 0.34 right now, a little bit of uptick here. But if we find correlations with gold that is actually not liking higher interest rates probabilities, this is just chopping around, barely flat today. Copper is liking the economy growing, and silver is just chopping around. So basically, dollar is not showing signs of bears. I think dollar at these levels is actually bullish for the stock market, and at the same time, if small caps can push again towards higher day levels, we are seeing Google pushing out, Nvidia pushing out, Meta pushing out, Apple is still in the red. It was lackluster at the open, but it's slowly grinding higher. So I think pay attention. We can have some nice things after lunch and into the afternoon, despite the fact that the fundamentals are not as good as expected. The price action is still there. So watch dollar and watch the small caps and regional banks. If they start to curl and start going green, we can have a nice push into the close from the S&Ps and from the Nasdaq, from Google, Nvidia, and Meta. So that's my quick analysis. I hope you are having a nice day. Today is a tricky day, but these days are really full of opportunities. So take those opportunities with patience and risk management, and you will be fine. Thank you for your time. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Thank you for your subscriptions and for your views. For supporting the channel. I love trading, I love teaching on YouTube, and I hope you find these videos really useful for you to learn all the differences in the markets and my approach on these markets. So thank you everyone, stay safe, and see you tomorrow.